There are now over 300 new FinTech startups, and all of them want to take a slice of business away from the traditional banks. The UK has even established a FinTech regulatory authority, and London has become the FinTech capital of the world. Traditional bankers scoff at these FinTech upstarts, and they suggest that in the likelihood of a financial downturn, these FinTech companies would simply disappear. But are these bankers right to scoff at the startups? Are they right to dismiss FinTech as something that won't really affect their core business? FinTech is the term used to describe the hundreds of apps and websites that are now providing the sort of financial services once provided exclusively by banks. The term also includes the payment systems now being offered by the tech giants, including Apple Pay, Android Pay, Amazon Merchant Loans and PayPal type systems. Because of licensing restrictions and regulations, Apple, Google and the other tech giants may never become the sort of bank you see on your high streets. But they are going to offer more and more of the financial services currently provided by the legacy banks, and they'll offer them to you more conveniently and for far less cost. Few customers or regulators would question the financial stability of any of the tech giants. These brands have a public trust value as great or greater than the traditional bank brands, and they would be very unlikely to disappear in the event of a financial downturn. There's a whole slew of new FinTech sites, and they offer us the opportunity to get foreign currencies, to transfer money to people at home or abroad, to buy insurance, to carry out all the normal financial transactions we'd expect legacy banks to offer. And there are crowd-funded and peer-to-peer lending sites which will offer personal loans and business loans, even mortgages. And robot advisors stand ready to help us make our own investment plans. Many legacy bankers scoff at these small FinTech startups, and it is true that the FinTech sector currently has the air of the Wild West about it. Some FinTech loans companies are failing to carry out proper credit checks on borrowers, which results in a high level of repayment defaults, and FinTech loan services are often failing to notify other loan providers and credit agencies about the loans they're making, which means the entire finance market has unreliable information about potential borrowers. Despite these worries, global funding for FinTech is rocketing, with the top 50 FinTech companies attracting $14.6 billion of capital since 2015, marking an increase in funding of more than 40% in just 12 months. There's no doubt that today London is the FinTech capital of the world. But after the UK's unwise decision to leave the European Union, that crown may be in doubt. But elsewhere around the world, support for FinTech is somewhat patchy, mainly due to some outdated and old-fashioned regulatory systems. While Sweden encourages digital financial services, Norway and Denmark still have regulatory barriers that make it hard for FinTechs to succeed without partnering with a traditional bank. Germany has a strong FinTech sector centred on Berlin, but German financial regulation is still restrictive, regressive and old-fashioned. However, in France, there's a vibrant and growing FinTech sector with increasing support from the national government. Meanwhile, in the USA, regulation is fragmented and often operates on a state-by-state level. Despite massive investment in Silicon Valley, FinTech is not yet as free to develop in the USA as it is in other parts of the world. India provides an excellent example of how developing economies are using FinTech to leapfrog traditional banking structures and bring financial services to millions who have never previously had a bank account. China is also aggressively pursuing the FinTech market, and KPMG claims that 4 out of the top 5 global FinTech innovators are now Chinese in origin. China is aiming to take the FinTech crown from London. Of course, the traditional banks aren't just going to suddenly disappear. They're far too well capitalised and have too many assets for that to happen. But I do think there's one new piece of technology which will profoundly alter the future of banking, and that's the technology known as the blockchain, and now its many derivatives. I've done a separate video on the blockchain, but it's worth mentioning here because it is the real disruptor of banking. In fact, I think that in the coming decades, the blockchain type technologies will even change the role of central banks like the Federal Reserve, the European Central Bank and the Bank of England. As a distributed, unhackable ledger of transactions, the blockchain and derivations of the system authenticates the movement of money and assets in a provable way that cannot be questioned or doubted. Trust is inherent. Experimental blockchains are now being used to track the sale of diamonds, the sale of houses and the transfer of bank funds. And of course the blockchain has been tracking the creation and transfer of all bitcoins since 2009. The blockchain is like the third layer of our global networks. The internet was the first network layer. The World Wide Web was the second layer, which made interactive communication possible, and the blockchain is the third layer, which allows value and assets to be traded and exchanged in a secure and verifiable manner. I consider the blockchain to be as important to our future as the internet and the World Wide Web. Money is one of humankind's greatest virtual inventions. Ever since we first used stones as a form of currency, all the way up to the modern day versions such as Bitcoin and Zcash, we've wanted reassurance that there is actual value in the virtual units we use as currency. And that's where blockchain and its derivatives come in. I think the blockchain will become the first type of self-authenticating form of money. In other words, money which can prove itself that it has value. And as such, I think it's going to change the future of banking and financial transactions forever.